Now, turning to the stock market, the Ghana Stock Exchange ended the first half of 2022 with a negative year-to-date return of 24.13% in dollar terms. This placed the country 12th out of 15 top stock exchanges on the African continent. Joining us to make sense of this outcome is Head of Trading at Republic Securities, Patrick Edem Agama. And Patrick, I don't know whether to describe this performance as dismal, but this is certainly below expectation. So what triggered this? What happened to the once buoyant Ghana Stock Exchange?
Well, good afternoon. So what we noticed is that as the bond market is improving, we know that the adverse effect will be on the stock market, where the stock market will drop. So this is very, very normal. However, in the first half of the year, we noticed that in terms of size or impact, the dip in MTN moving from 1.11 Ghana cedis per share to 90 pesos per share affected the market a lot because MTN is a heavyweight. We also saw that in terms of year-to-date change, we saw dip in PBC, Access Bank, Farm Milk, Total, Benso, Oil Palm, Cow Bank, and GCB. And that also affected the markets grossly. For the implications of this, we expect that investors to see this as an opportunity to reposition their portfolios, because when the market is dropping, it gives you opportunity to buy at a low price. So although you might be looking at a dip, but we can see that portfolio managers can take opportunity to restructure average cost and position themselves for the rise.
And what is the outlook for the rest of the year? Do you see the trading bouncing back like it was previously when we used to tout the Ghana Stock Exchange as being number one or number two in Africa?
Yes, for the rest of the year, we foresee some stocks gaining momentum and rising. MTN is an example. We've seen it rise for some time, but it's still stable at the current 90 pesos. We foresee that when the confidence comes to the economy and the bond yields begin to drop, investors will see the opportunity in taking positions in the stock market now when it's particular or it's supposed to be.
Yeah, I know we talked about the implications for investors, but I want to talk about the market in itself, the Ghana Stock Exchange. This performance we're seeing in the first half of the year, does it say anything about the market in itself?
Well, yes, the market will have to improve. In more advanced markets, when the stock market is rising, investors make money. And even when the stock market is falling, investors are still making money because people can short sell and make money. But our market, short selling is not allowed. So when the market grows, whenever there is an increase in prices or the performance gets better, investors are still making money. And even when it goes south, investors will make money. So we need some development in the market. So that development can bring about a change where investors will not be scared of the market keeping or dropping from time to time.
Let's pay attention to trading for this week. What do we expect?
Well, for the stock market, we expect more activity in CAL, MTN. However, we've seen that there are bids coming in for Total and Access Bank. So we should expect investors to have more interest. The buy side is building little by little because investors are beginning to see how these stocks are priced and relative to how they were priced some months ago. And they are taking advantage of this position in the market.
Well, let's switch topics and talk about treasury bills. Some good news from last week's auction. Government achieved around 42 to 43% oversubscription of its weekly sale. Is it a sign of stability?
Well, with the increased number or demand for these bills, yes, we can say that yes, we are reaching that stability level, but it will take some time. We know the impact of the IMF news was felt on the market a bit, so we expect the rates to stabilize. If you look at the 91-day treasury bill, it inched up just slightly to 25.89%. Surprisingly, the 182-day Treasury bill closed lower. It dropped by 2.41 basis points to close at 26.55%. That should tell you clearly where the rates are expected to be. But we know the IMF news will take some time to really impact the market after every discussion is over. So we expect that stability to come in, but there is still increasing demand for short-dated securities on the market.
And one last one before you go. On the secondary market, volumes decreased by 37% week on week to 3.9 billion, you are telling me?
Yes, we saw a huge decrease in trade volumes, and this was due to the primary auctions that we saw last week. That's for the cocoa bill and the treasury bills. For this week too, we expect the volumes to reduce a bit because we are expecting a new cocoa bill to be issued as well as new treasury bill. Government is targeting about 932 million this week through the issuance of 91-day and 182-day treasury bill. So we expect investors to take advantage of that, and that will be at a detriment to the secondary market.
All right. Thank you very much, Patrick Demagama, the head of trading at Republic Securities. Appreciate your time.